Good morning, everyone. Welcome to Prebell with William O'Neill India. My name is Rajashekhar Kongari, Equity Research Analyst. I'm part of MarketSmith India team, which manages model portfolio. Before we go ahead into this podcast, the disclaimer for this podcast or presentation is whatever stocks we discuss are intended only for educational purpose, should not be taken as an investment advice. Here is the Nifty's daily chart taken from our website, MarketSmith India. If you take a long-term view, the view has been bearish after making a new all-time high around 80,887 level. Nifty has been finding selling pressure and it has breached its key moving averages in the meantime as well. Starting with 21, 50, 100 and 200 DMA was also breached recently. So the overall view has been bearish in the market, and we have been changing the market status to down into rally attempt, and again we we changed the market status to downtrend from rally attempt. Recently, Nifty has bottomed out for the short term. We can see here this is a short term correction low for the Nifty. Nifty has been holding this level for the last three sessions. Hence, we have changed the market status to rally attempt as well. From here, we would like to see a follow-through session on the Nifty, indicating fresh hope of fresh rally or fresh buying happening in the market by institutional investors. That is indicated by surge in volume. So both the price and volume action should be very strong on that particular day. Then we'll be changing the market status to confirm the trend. But currently, as Nifty is trading moving averages, it is very difficult for the Nifty to rally from here because these levels will definitely act as a resistance and there is a overhead supply in most of the stocks as well in leading stocks. So it's very difficult that those overhead supply levels will definitely act as a resistance for the stocks as well. So a new fresh institutional activity should happen so that these resistance are taken very keenly and fresh rally to happen. According to market status, we are in a rally attempt as we told previously as well, and we'll waiting for a follow-through day session. Until then, we'll be identifying stocks which are forming right side of the base pattern or which are resilient in the current market, and we'll start adding these stocks to buy watch list. And when the market structure improves or any buy signal is generated by these stocks and the market structure is improved, then we'll add these stocks to model portfolio. Some of the stocks or companies which are in news and which will be under radar in the today's trading session are Lupin, the leading pharmaceutical company, has received an approval from US FDA. So this stock will definitely under radar today. Bharat Electronics has signed, and Ministry of Defense has signed two contracts with the company worth 3,800 crores. This is related to supply of radar-related digital warning receivers for the Indian Air Force. Rail Vikas Nigam, that is RVNL, shortly known as and joint venture with the Rachana Construction Company, has bagged an order worth 252 crores in Gujarat. And the company's share in this joint venture is 40%, and Rachana's share will be 60%. India Bulls Housing Finance has raised nearly 92 crores by issuing non-convertible debentures NCDs on public issue basis. Another company, which is a very small cap company, Jayashree Chemicals, is planning to sell a windmill in Tamil Nadu to Naruvizhi Powers for 4.7 crores. On the macroeconomic front, Bank of England came up with their new interest rates. The committee has increased, has voted 7:2 in favor of 25 BPS rate hike to 4.25%. This is the 11th consecutive rate hike done by the bank, and this is indicating a huge wave of higher inflation and higher interest rates across Europe and US and in Asia as well. Just 2 days back, the US Fed has also increased their interest rates by 25 bps. So, and most of the advanced economies and developing economies are taking the heat here now. With these higher interest rates, it's very difficult for the growth to happen because of higher cost of funds. Companies will postpone their capex plans, any new capex plans. Existing capex plans will also be taken very slowly because of higher cost of funds. The margins will get impacted both for companies and as well as for individuals as well. These borrowing costs are very higher at the current moment. Housing rates, housing loan rates, and vehicle loans, or everything from personal loans are getting costlier day by day. So people tend to not take fresh loans because of higher interest rates. And if the people are not taking new fresh loans, then the growth will get hampered. Overnight, US market closed in the higher territory. Dow Jones and S&P closed 0.2 to 0.3% higher, whereas Nasdaq Composite, which has heavyweights like such as tech companies, closed more than 1% higher. But the Asian markets are taking negative cues, and both three major indices which we track, Shanghai Composite, Kospi, Nikkei, are trading in the negative territory. For the opening of in India's market, we are taking cues from SGX Nifty, and SGX Nifty is indicating a muted opening. There are no clear signs of gap up or gap down opening, so mostly it will be a muted opening. But of late, we have been seeing volatility during the intraday sessions. So sometimes when the Nifty is gapping higher, as the session progressing, selling pressure is coming. On the other side, if the index is opening on the lower side, we are seeing some kind of buying, and so there is no clear momentum on either direction on intraday basis. For the sectoral view front, this is the sectoral view as of yesterday's closing. You can see most of the indices are in either rally attempt or in correction. Only two indices, sector-specific indices such as Nifty Energy, Nifty Metal are in rally. Apart from these two indices, all the other indices are in rally attempt. So all these indices are also waiting for a follow-through day to change the market status to confirmed uptrend or rally. Nifty mid cap and small cap indices, commonly known as broader market indices, are also in rally attempt. Also, if you see the moving averages front, all these indices are trading below their moving averages except for Nifty FMCG, which is commonly known as a defensive sector, is holding their 50 and 200 EMA levels. Apart from this index, all the other indices are trading below their 50 and 200 EMA levels. So when the follow through day happens, most of these indices will reclaim their moving averages as well. For the breakouts to be successful, the broad-based rally should happen, and it should not be any sector-specific rally. Then the probability of breakout successful will be lower. If only broad-based buying is seen in the market, then stocks from various sectors will do well, and the probability of breakouts will be successful. Thanks for joining today's pre-bill. Have a good trading session.